Now let's go to South Africa. The country is evaluating assets it could sell to pay for this month's $169.5 million bailout of the unprofitable carrier South African Airways. Now, Finance Minister Malusi Gigaba says the government's decision to settle a debt owed by the airline to Standard Chartered mustn't affect the balance of this year's budget. He added that further details would be provided in October and that a 39% stake in phone company Telkom South Africa was among the assets being considered for disposal. Well, Angelo Coppola now joins us in Johannesburg with more on this. Angelo, as always, welcome to the show. It looks like we don't have him right now, but staying in the country, many in South Africa are celebrating the Reserve Bank's decision to cut rates. The bank lowered the repo rate by 25 basis points this week, providing some welcome relief to highly indebted and cash-strapped consumers. But the Reserve Bank has warned that it could reverse its decision should the inflation outlook get worse. Here's Sumitra Nydoo with more.
The conditions for a cut were favorable, with inflation back within the 3 to 6% target range. Consumers are celebrating as it's the first cut in 5 years.
A 25 basis point goes a long way for those families and those households that are highly indebted. Albeit very, very small, however, very significant in terms of a signal by the Reserve Bank as to where their stance is.
Food, oil and electricity prices are all showing declines, which means that inflation could ease further. But ongoing political wrangling is creating uncertainty, causing lower investment flows, which could lead to further ratings downgrades. The bank lowered its growth forecast for the economy down to just 0.5%. Any further tightening abroad could also see capital outflows.
The moment the US starts picking up speed again, then attention will be diverted from emerging economies. There's an inherent danger as far as a ratings downgrade is concerned, and that could happen as soon as December. So the Reserve Bank, in that instance, would have no other option open to them other than to increase rates.
The decision to lower the repo rate came as a bit of a surprise. Even though inflation is easing back, there's still a number of upside risks, more especially on the domestic front, that could alter that outlook. But the Reserve Bank warned that should there be any deterioration, it won't hesitate to hike rates again. And the Reserve Bank governor made very clear that there was no political interference in making this decision.
No president, past or present, no minister of finance, past or present, had ever attempted to tell the SARB how to go about in executing its mandate. We earned our credibility and we will protect it because we have got a constitutional duty to protect the value of the currency in the interest of balanced and sustainable growth in the Republic.
Apart from the surprise cut, economists were more pleased with the governor's strong stance to protect the independence of the bank. And even though the MPC warned that the rate cut could be reversed, there's consensus that the bank remains in good hands. Sumitra Nydoo, CGTN, Johannesburg, South Africa.
Well, let's go back for a moment to South Africa's plan to sell its state assets to bail out struggling South African Airways. Angelo Coppola is back with us in Johannesburg with more on this. Angelo, as always, welcome to the show. Now, we know Finance Minister Malusi Gigaba says the details of this asset disposal will be made clear back next in October when he's presenting the mini budget. What assets do you think we could see the government likely to sell?
Well, Uche, when I spoke to the minister's spokesperson a little while ago, he said that the letter doesn't really have everything to do with SAA, that the National Treasury is in fact going through an audit process of all of the SOEs. So it's looking at everything that's under control of Treasury and that the government kind of owns or partially owns. So they say they're trying to separate the two issues, and they say that the audit will be completed and then they'll make calls. In terms of what they can sell, there are a range of SOEs that could be sold. For example, they could sell SAA, but they probably won't sell them because they're about to recapitalize it. They could look at Portnet, which is a division of Transnet that doesn't have any kind of corruption or fraud scandals associated with it. Portnet operates all the harbors within the country, so that's an opportunity. And of course, they could sell their stake in Telkom, which is the listed entity. But as one analyst put it to me, that would be like pulling out the flowers and then watering the weeds, which are the SOEs.
And Angelo, the question does rise as to whether the government can raise enough funds through a sale of assets to bail out the struggling airline. Malusi Gigaba did say that he doesn't want it to affect the balance of the 2007-2018 budget. What are your thoughts on whether the government can raise this money through a sale?
Well, Uche, the issue really is like what kind of business person is going to go and take a stake or an entire business that is so indebted, and that debt overhang is an issue that will scare everyone away. So unless that debt's written off or there is significant tax incentives to entice business people to get involved, it's unlikely that anyone's going to take the bait there. So that's the big issue there. Of course, government in terms of solutions could issue more bonds to try and raise money to cover that potential shortfall. So that's an option. But you know what, at the moment, as it stands, there aren't many options that government has to raise that capital. They, of course, can go to the individual taxpayer who's long suffering and squeeze them for a little bit more of their disposable income and turn that into tax to try and cover that shortfall. But at the moment, they're kind of stuck between a rock and a hard place.
Now, looking at SAA's business as a whole, looking forward, has there been any update on the airline's new CEO or even the conditions that the government should have put in place that should have come actually with this bailout?
Well, it's been radio silence since last Friday, in fact, when Malusi Gigaba announced his 14-point action plan. In that presentation, he also made note that he was going to have the CEO's appointment finalized by the end of the month, which is just 7 days away. At the moment, no news yet, but there are organizations out there that are calling on Gigaba to make sure that he appoints somebody who has knowledge and experience of the aviation sector. They're all calling for the not to appoint a political appointee into the position, something like happened with Dudu Mnyene, the outgoing executive chair. So everyone's calling for somebody who can run an organization, who's been involved in the aviation sector. But for now, it's dead quiet, so we've got to wait another 7 days, Uche.
Well, we'll certainly be watching. Many thanks, Angelo, for your insights. Angelo Coppola joining us there in Johannesburg.